Okay, this is OTE, and that's all the data I've got there. So I think I had a look at this the other day, and really there's not much we can do with that. I mean, it's made a new low and a new high, but it's still in the middle of its range between 1.2 and 1.7. You've had volume pick up a bit there, and that's shifted it up, and then it's come back. I mean, if we're going to do VSA, some VSA on it, you could say, well, maybe that's testing the volume, but really it's just too illiquid and too new to do anything with that. But it's in its range, so, and in the middle of the range, so it's up to you what you want to do with it. It's not showing anything particularly weak or strong. It just isn't enough data there, and really the volume on a 1 cent stock is really, there's not a lot there. It'll move up and down on the smell of an oily rag, so to speak. But anyway, it's that's its range. That's what it's been holding, and we'll just have to see how it goes as it goes along. This is AZY and Antipa Minerals, and oh look, we've had a volume spiking here, and it's gone right up there. It's been before that quite in a liquid stock, and then all of a sudden we've got all this volume come on. That's what I mean by tightly held or liquid stocks. They move on the smell of an oily rag, but they also can move down just as quick. So it's moved up and closed on its bum. There's no trapped holders there that it's trying to absorb, so that's purely profit taking, and a lot of it. And it's must have had some announcement or something like that. It looks like it started picking up volume here. Now it's moving quite erratically. They've done a little breakout, they've tested it, and it's gone up. It's had distribution as it's come across the last high there. It's had a bit of trouble getting through there, but it's broken out. But then that volume there is just excessive. See, if that was all buying, it shouldn't close on its bum, and then the next one shouldn't close down like that. But the volume's still there, so maybe it'll go again. It's just and it could, and you don't know where it's going to go to, basically, and it could go anywhere. Use your fibs, I suppose. And I would probably do a reverse fib from there. So it's gone through to 1.68. Let's see if I can get, I can't, here we go, there's a 38 cents there. But if I was just going to interpret it just from a purely VSA point of view, I'd say it's been distributed there, come back, it's tried to get back through there, but it's that'll act as resistance to the price going up there. And when all this volume's on, yeah, sure, there's a lot of demand, a lot of buying as it's going up, but there's a lot of selling as well. That's why it's closed low like that, and that's going to act as resistance. What you want to see is all this volume now tested and find a new level. You want to see really low volume down bars testing that volume, even if it breaks higher. I mean, at the moment, I just wouldn't touch it while it's doing that, because it could easily be distribution. Well, it looks like distribution, but because it's so illiquid, it can move very easily anywhere. It's very unpredictable, but that's a very weak bar. It'll need some good volume to get back through there. But for me, if I see one of those, normally I just run, I just leave it alone, because it can easily just collapse. And if it does collapse, then it'll damage this stock for quite a while, I'd say. You'd probably, if I was looking for support, when it does eventually find a level, you've got probably this widespread. That's not that high volume though. The highest one before this kicked in was the 17.5 cents. And then you could probably go on your resistance, take the close or the low of that bar and the high of that bar. And you can put, that's a high volume bar as well. So you want to see low volume testing now to show the selling has dried up. All high volume contains selling. The market doesn't generally like high volume up bars or high volume up bars because they contain a lot of selling. So that's a lot of selling in there. And I would expect that once the demand from whatever announcements has happened, that you'll want to see some testing come in now, because I think that's my immediate thoughts is that that has to come off. And while all this high volume's on, you don't want to be taking a new position in the stock. See where it wants to test. See where the low volume down bars are, narrow spread down bars, testing to stick that supply has been absorbed. If it can break back up into here properly, and then get some really light volume down on the low of this bar, or even if it wants to break up, then look for your really light volumes on the light volume down bars on the resistance lines, and then a confirmation bar will be the next bar closing higher on slightly more volume. You know, we don't like buying the high volume up bars because smart money typically sell on up bars, and I would expect lower prices now, seeing that. But who knows? Maybe they're just going to try and push higher. But the buying opportunities will be on the low volume down bars to show that the selling has been absorbed. But yeah, but anyway, that could collapse as low as the 17.5 cents again quite easily. Maybe not, but that's, you know, it's moved up so hard and fast, and the selling is so great. That's a lot of selling in there that they can come down pretty hard and fast. So just wait for the volume to calm down and get your low volume testing. I would on that one. This is MYG. Looks like I've put a few lines on it before. There's your really high volume up bar, the highest volume on the map. So I've marked the top of that. That's broken below there now, so that's not a terribly good sign. And I've marked your other high volume areas here as well. You can see how they've acted as support and resistance lines, but once you start going into a downtrend like this, they start, and you break these lines, and they start acting as resistance. So this has been in a downtrend, and it still hasn't broken it yet. Probably put a little channel on it. Or maybe I can put a pitchfork on it. I'll see if we can get an uptrending. No, that's not really a good pitchfork, because the prices on your pitchforks, you want to see price come back to the median. If they fail to go to the median, a lot of times they come back and take out the previous low. So anyway, we'll get rid of that one. We might have a look at, see if we can do a downtrending one. There we go. That gives us a bit of a median line that it's been cracking along. Probably can do another one from that high there. That sort of looks pretty much the same, pretty much parallel, so we'll keep that one. So that's your median line. It's probably going to, we'll get rid of that volume because it's, so you can have a look at what's actually in the most recent past. So you can see where smart money sell on up bars. That's why we don't like buying the up bars. We wait for some testing. Once it broke that high volume up bar, then it's collapsed. You'll see smart money buying down bars. You'll see some support come in as price moves down at the bottom. That shifts it up, but it's immediately sold into. You see high volume up bars. That's knocked it back again. And at these lows, we do have a bit of, this is at the was holding a sort of support there until the market crashed, and it's come down on high-ish sort of volume. But it's not. We want to see this sort of volume, you know, coming in at the lows, and then we get a really high volume up bar. So you see, if that was all buying there, then it couldn't collapse the next bar like that. It'd have to keep going. So that's a pretty bad 2-bar reversal there, and that's knocked it down. And then there's nothing really. I mean, we want to see this bar here tested probably on light volume, but you're not really, you know, the volume goes up and down, but it's not going anywhere. So that I would expect to drop probably further down to the median line. Let's see, we're looking for climactic bars at these lows, and there's nothing really climactic there. There's been a bit of stopping volume come that's shifted it sideways, but it's really, I mean, your higher volume bars since then are up bars and a 2-bar reversal. So that's, I think, will knock the price back eventually. There's not a lot of selling pressure on it here, but that's not enough to take it up. If there's really low supply, if smart money are interested and they see really low supply, low selling, if they've been accumulating, then they'll take it up. But if they don't respond to that low supply, then it just means they're not interested in the stock at the moment, and unless you have smart money continually buying and feeding the share price, it'll eventually roll over. So you've got the bottom of your high volume bar here. I think that's your last stand. And you've got the median line goes through there as well. So that's could be a very real possibility. You've probably got some tentative support on your last down bar there that shifted it sideways, but there's nothing there to tell me that it's bottomed yet. You're still in your downtrend, well into your downtrend, and it's tracking a median line down. It's tracking you got a fairly steep downtrend there, and it's away from it at the moment. So you really want to get away. You really want to get away from this downtrend before you start looking at it and start making some higher lows. You don't have any higher lows there at all. You're just making lower lows and lower highs. Let's have a quick look at the weekly chart and just see. Yeah, that just looks like it's going. See, your high volume bar is a weak bar, an up thrust. That's an up thrust. That's really light volume, low supply there. So, but see, we're right under the close of this bar as well. So that's going to add to suppressing the price. Oh, sorry about that. That was my phone. Anyway, you get that. But yeah, and that's the problem when you see really high volume up bars, especially when they're new. Well, that wasn't a new territory. There was some selling there, but it was still excessive volume to push through the last tops over there. So smart money will typically sell on high volume up bars, but if they're bullish, they'll test that volume. But in this case, they just rapidly marked it up for distribution, and it's come off, and it hasn't. And where it bottoms, it hasn't really told us where it's going to bottom yet, and it's moved sideways a little bit here, but there's nothing saying that they're buying it at these cheap prices. I think they're sold out here, and they are yet to go to their target buy area wherever they're bullish. Anyway, that's MYG. Okay, this is CTM, Centaurus Metals. Don't have too much data for this, but anyway, we can see this is the weekly chart. You can see it's pushed up here, come back and tested on less volume, pushed again on high volume. We've seen testing, but the testing is still very high, but it's pushed through again on really high volume, come back and tested, and they've actually tested the close of this bar here, because there's a lot of supply present. They don't like moving it up if there's too much supply present. But anyway, they've come back, tested, mopped it up and taken up, but they've been taking this up very quickly, so they've been distributing along the way. I think they've just accumulated down below and then been buying and selling it up, but I think they've been distributing. I think they started distributing there mainly, and then supported it, and then finished with your 2-bar reversal there. So that's why we don't like buying the up bar. We'll wait for the testing to happen. It's broken out here, so at this stage we would have been looking for the test. When it's closed, the next bar is closed on its bum on higher volume, we would have been not wanting to be in the stock at this stage, and then it's just kept going down. And then it's come down here, and we've got a bit of stopping volume has come in and shifted it sideways. It looks like they've spent a bit of time in accumulation there. You see when the volume starts getting really light, then they're testing this higher volume, and then it's pushed, but the volume there is excessive and looks like it's hit its head up against the high of that bar there. So if that was all buying, why has it come down so hard the next bar? So that looks suspiciously like, I mean, there's a lot of trapped holders here, so it could be they're trying to absorb trapped buyers here from the left that are just going to exit as it goes up, but it still looks very weak. But anyway, it's come back on lighter volume, still high volume, closed on the high, so that's good. It's tried to go back through the area of supply, but it's not ready to go high yet, and they've tested it, but the volume's got really light. It's actually more of a no demand because it's an up bar on the lightest volume in 3 bars. It's technically no demand, but with these penny stocks, they can be quite erratic. So I'd say that's more low supply. The next bar closed up on slightly higher volume, so you could probably actually taken a short-term entry targeting the resistance line on that bar there, and it's gone up on more volume. This time the volume is not as excessive as it was the last time, so that's good. But if it were to break out from here, we'd want to see it. They'll test this area again, but it could be just completing selling as well that they were doing here. So we'll just have to see. Might zoom in on the daily. It has sort of broken its downtrend here, even though there is, if you take those 2 highs, I mean, we want to see it break out now to break out properly above this line. And if I put it, copy that on the low, it sort of held that, stayed above, got back above. So I'd use that as support there at the 8 cents, resistance at the 10.5, then the 13, then the 16. Just have a look on the daily. Yeah, you can see your high volume. That's really excessive volume there on the daily, and it's hit its head. That's our last really high volume bar. It's hit its head on that lot of volume there. It's collapsed. So that was distribution there, obviously, as it's tried to get back up into the, well, it's jumped up there and they were selling it straight away and knocked it right back. And since then it's sort of been building. We've got high volume up, it's come back, tested this volume over here, pushed up on high volume, and the last bar they've tested that last lot of volume and closed high, and there's less volume now. So it looks like they might be ready to push again, maybe. But you got a lot of weakness now behind you. All your high volume bars are above you, and they're going to be. You need to push. You need to push through those on some good volume and then retest. So that's had a high volume up. They've retested in the body of the bar. So they may push, but whether they're going to sell it straight away again or not, we don't know. The market had a bad day. The Dow had a bad day on Friday, so they may test again. But that is excessive volume there, so that's going to be a problem for the price getting through there. That was definitely wholesaling. It was done very quickly, and it's knocked it back really hard. So I wouldn't. You do have a little bit of an uptrend that has sort of started there. Probably can do a bit of a chin. That's a bit hard. Let's see what can we do. We can probably put a pitchfork on it. Oh. So that's broken out of the top of that downtrending pitchfork, but it's not a particularly good one because it's only got a couple of touches on the median line. So that's I'll probably choose closer pivot there. That's better. But not particularly good. Let's see if I can get an uptrending pitchfork. That high, low, high, low. So it's hit the median, come back, it's run parallel to the bottom time, hasn't come back and touched it. That's a better median line because you're getting price coming back to it, back to the median line, back here. And you want it to come up and tag the median line at least. If it doesn't do that, it will probably take out your last low, which is that one there, and come back to the bottom to the 9 cents. But we'll just have to see. You've got distribution, you've got weakness behind you now instead of strength. I mean, you've got some strength coming at the lows. You've got some volume coming at the lows here when things crashed, but your really high volume bars, your weak bars are above you. So I wouldn't be buying this just yet. I don't think until it could break. I really want to see it break past this high volume bar up here above the 11.5 cents and come back and retest. Or at least break past the median line and come back and retest on light volume. That would sort of do the same thing. So you want to get above your climactic bar and then see it retested on really light volume, and that would give you a safer entry. At the moment it's not looking too safe. I mean, you've got a little up move there, but you're really up against it in this bar here, and you're right there. So you know it's they could push up into there, but whether they're going to distribute again, we don't know until they break out of there. I think we'll just have to we'll just have to see. I suppose if you saw really light volume down bars closing high, the next bar confirms by closing higher and slightly more volume. I suppose you could do really short-term stuff targeting that area, buy and sell targeting that area. That's what I typically do. It's probably, if you're going longer term, you want it to break past that high volume climactic area there and come back and test it, and that'll give you a good long-term entry, and that'll also break you out of this downtrend as well. But you have started making higher lows, so that's and higher. Well, you've got one higher, you've got one lower low, lower high there, but you've got still higher than the previous pivot there. So you do have a sort of a shorter term uptrend in play there. You're just right up against it at the moment in this area, and that's the place to be, I think, for a good a better long-term entry. But so that's a bit of a mixed bag, that one. But anyway, that's CTM. Your support on the bottom of the tine of the pitchfork, resistance at the median line. If it misses that median line, if it wants to come back off before it hits that median line, it'll take out that previous pivot, I would say, and come back to the tine here at least. And a lot of times they even take out the pivot low there as well. But I think if it pivots before it hits the median line, it will come back to the bottom tine. So yeah, so anyway, we can just keep an eye on that. But you've got background weakness behind you. You've got more background weakness behind you than you've got background strength, because your high volume bars are all weak up bars at the moment. Anyway, that's CTM.